The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, it's the 8:06 a.m. edition here. This will be replayed for my usual show at 10. Just can't make it at 10, both today and tomorrow. So we're looking at the Dow at this particular point, and this is at 8:06 in the morning, pre-open, which is at 9:30 this Eastern time. And go to the futures, and we're looking at the Dow futures made a peak D last. Oh, wait a minute. The futures were slightly different. Let me just check. I should have done this a little earlier. I didn't see that. So the high on Friday was 34,489. And yesterday's high was 34,489. Oh, same thing. So that is a leg D. It isn't a peak D yet. I'm anticipating that there is a peak D in the futures of the Dow, because the ES, I'm going to go to the continuous contract because you can see in all time frames. So yes, this did go to a leg D, and it's actually, if there's no new high in the futures, let's just look at the S&P cash. The S&P cash, because this is pre-market, I went to a leg D right on the 200-period exponential moving average. I think this is going to be a little bit of resistance right here. You can see it's also the Chapman Wave inside track repellent line right there in the weekly chart. So we'll see what happens. It'll be really impressive if the S&P can actually get to the 3405 level, 3410 level today or tomorrow. So far, I think there's a little bit of resistance. We'll see if it's able to break that. Looking at the QQQ, which is the NDX 100, trading at 282.30. Same thing, leg D, but actually holding quite well. The technicals are pretty good. IWM, the Russell 2000, trading at 187.22, up 40 cents pre-market. In leg D at resistance. At leg C. That should pull back and then make a leg D. But look at this. For the first time, it's outside the inside track resistance area. Now, this is going to be very interesting because gold made a slightly higher high thus far today at 1922 in the continuous contract. Now, the high yesterday was fractionally, it was that at 0.8, yes, 93.31.8, 1931.8. So double, exactly a precise high yesterday, pulling back today. And you can see that it's held extremely well. The 9 is over the 14, the price is over the 9. The MACD is good, stochastics at 90%, terrific. On balance volume says a little bit overbought, could pull back. And there's a little gray line right there in the daily chart. That's the relative strength. So far, all of that's good. Leg C in the weekly chart. I'll go quickly to the dollar because the dollar was trying its best to rally over the last few days, but it just hasn't been able to hold it. Even today, it rallied up, and now it's only it's down 21 cents at 102.1621 ticks, I should say. What's interesting, 101.30 was the low back, I think it was in June, runs all the way to 114.78 in September, comes back, and what does it do? It retests at 101.77, less than $1 away from where it was months ago. I love the way all of these are doing that. The only trouble is that natural gas did that, and then it went even lower. Look, natural gas is trading down 16 cents at 3.418. And the TLT, which is bonds are trading up $1.26 at 107.32. That's just saying that yields are trying to come down right here. I'll talk about that when we get back from my Tiger Technicians Hour. This is the early edition. It'll be played again at 10 a.m. Repeat. So with that, we're going to just wrap it up. We're waiting for the music. Am I beating the music? That's a little unusual. So we're waiting for the music to come, and it should. Or am I not getting anything? Hello, music. Hello, music. Let me just check with my engineer. 4 minutes to the break. Yeah, still waiting. So I'm not sure if that's going on or not, and that's unusual. So now what do I do? Just keep talking. The VIX index. The VIX index is, just let me know. My engineer, if you can just type in the dance something or in my ear. The VIX index is 19.14, down 22 ticks, and we'll have to see how that whether or not it gets to the 21 area over the next few days, if there is a sudden decline. So far, it's in the low register. So I'm going to just have to say that I'm a little confused here as to I should have run out of time, and I could be talking here in the break. I'm not sure quite what's going on. So 4 minutes to the break. 4 minutes to the break. What break? Oh, of course. What am I thinking about? I thought I was doing the update at 8 o'clock. Oh, plenty of time. Nothing to worry about yet. Let's look at the EUR USD. What a waste of time that was. The EUR is in leg F. Could be a new A, but I'm calling it an F for this moment. And it's in leg E in the weekly chart here in the middle. All the technicals are still very good. And that's why my engineer was putting in 4 minutes, plenty of time. I forgot what I was doing there. Leg A in the monthly chart. And that's all saying that there's been a change over the last 2 to 3 months, whereby for the first time you're actually seeing real weakness in the dollar. It looks a little oversold. It could bounce, but right now we're looking at the weakness in the dollar persisting. And the euro has been able to have a very strong leg to the upside. Look at the persistence of this leg. There's from the low that was made. This is now the euro. This is I'm going to give you the price because that does change. 0.95373 was the low in September, the last week of September. And then it goes peak A, 2 bars rest. Third bar goes to leg B, 1 bar rest. 2 bars later goes to C, 1 bar rest. 3 bars later goes to D, 3 bars rest. 2 bars rest, and the third bar goes to E. It continues E, and it's still in leg E. And the MACD in the weekly chart is a really strong, a flat stochastic at 93 is really positive. And that's just saying that the trend of the euro going higher has gone from the daily, which is very strong, to the weekly, which is in a buy mode in leg E. I'm not going to say that this is a potential instant restart right here just yet, but look at that leg A in the monthly chart going right above all that resistance that you had back in June and July in the 1.07 area. And here it is at 1.083. Very nice. If you look at the USD JPY, this is the yen. We did make a peak F in the monthly chart. Actually, the dollar really looks like, did I do that in the UUP? Yeah, you see the UUP made an alternate count F, but the dollar itself, the way I'm counting it, that is, I could have called it an F/C, but that 89.21 low that was made back in early 2021, that was in, is that 21? That was January of 2021. 88.25. Yes, it wasn't. Oh, that could be a continuous contract. I should have put that in, that there's an alternate account potential in the dollar. That would mean that the dollar is really making a much more serious top. And now let's go and look at this. In the weekly chart, the MACD is still very weak. This is WEEK and a WEAK. And look at the stochastic at 3.42%. That's the equivalent of, some charts we've looked at lately which has had the stochastic in the 97% area. Here it is on the exact opposite side. So this is very weak. You're going to have a lot to happen to get the daily, which is 11% in the stochastic, to really get into the 17-18% area and to help the weekly chart go into the 8 or 9% area. So, yeah, that's very well. I'll be back. Basil Chapman, early edition. Dow futures up 41, S&P futures up 11. We'll be right back. Oh, I never even showed you this.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. Sometimes a bit of a waste of a time to do this when my show is going to be repeated 2 hours later. But in the meantime, I'm going to show you. I was doing this earlier on. I think that Dennis could see it because my charts show in my slot, my channel. And here it is. It did a recycle. It had peak D, the fourth highest peak is where other things can happen in the Chapman Wave methodology. Look, here was a peak D at just after 7 o'clock. But the 9 was holding over the 14. It went to another peak D. Within a few moments, it did almost an instant restart, went to peak ABC, another D, and then it did another Chapman Wave instant restart. That means within 3 bars, it makes a high. But when I do the futures, it just has to have a little peak A underneath that D and hold that and make a new high. And that says, oh, you've got another one. So there are 1, 2, 3, 4 peak Ds. That's the objective in the Chapman Wave, to go from a buy signal to a buy mode, which says there should be 4 higher peaks. Then what happened is it made the D, and this is where I drew in a left side, right side price time match. And that time match said that there should be a retracement back to the whole cluster formation of lows at about 4,019. This is the at 4,018.75 in the E-mini 1 minute chart. That's the March E-mini. And now what we're doing is we're looking at a potential Chapman Wave dreaded H pattern, which says just be careful, because if there's a decided pullback in the next, and of course we've got some economic news coming up very soon, if there's a slide under 4,018, that means you could have a little bit more of a digestive phase. Not only that, in the I always say the weekly chart, in the 10-minute chart, we've gone from 1 minute to a 10-minute chart, like a daily to a monthly. That is a peak E, and that makes 4,018, the 14-period exponential moving average, very strong support. You could actually go sideways between 4,018, so that'd be 4,021 and 4,018 for a while longer. But my thinking is that look at the vertical test. If you look at what's going on here with on-balance volume, MACD, and all that, there should be a slide underneath 419 in the next few minutes. But we're looking at that. Here's gold. Of course, this means nothing because the 1 minute chart. Now, I don't like these sudden spikes to the upside like that, but I'm going to put here the alternative is a peak. Instead of a peak D, you can double top at exactly the same price on the left, or just a fraction under it for a peak C1 and then a peak C2. That C2 acts exactly like a D, and it says, be careful, but if you do get a C2 and the price holds quite well, very often you can see a sudden pop to make that leg D. And in the 10-minute chart of gold, this is the continuous contract. You've got good strength because walking the 9-period exponential moving average, and gold is up $11 at 1920. I'll show you the daily chart in a moment, but a couple of things that I had. A couple of questions came in. I'm going to just do that in a moment. And let me just show you crude oil. Remember, peak D is your objective. Well, here's your cup formation. It went perfectly in the bar symmetry from the left side high, back around about 6:50 this morning Eastern time, pulls back down, it comes around, makes the cup formation, retests just under that previous high, makes a peak D, and now it's pulling back. And now you've got, this is a sine wave. It goes from a cup to an arch to a cup to an arch, and it's in a rectangle formation in the 10-minute chart. All right, enough with that. Let's get back to our real story. And the real story says, okay, this is what I'm looking at. I'm anticipating, let's just go to the Dow, IND. I'm anticipating that there's a consolidation that's unfolding at this particular point. I do not like to see peak Ds underneath previous highs. When you're coming off major lows, you obviously, if you've got a rising tide, you're going to get a peak D, then a pullback, then another 4 peaks higher because you've made a major low. But we've already come sharply off the low that was made. And as a result, I think this could be a little digestive phase. And yes, you had Goldman Sachs. Look at this, Goldman Sachs. Goldman Sachs just took a huge pounding yesterday, makes a leg C, and then gets all the way from 374, 342 is the 200-period exponential moving average. And look at the weekly chart, how it just kind of stalled. And that did affect just a little bit. It did affect the IAI, which is the iShares Broker Dealer Index, ETF. In a leg E, probably a peak E today, underneath the 103.46 previous high. And that was back, I think, December the 1st. And you can see it's made a peak C in the weekly chart, nicely out of the resistance area. It's tested it. So isn't that impressive that with Goldman in the iShares Broker Dealer and Security ETF, the iShares IAI, it didn't really impact it all that badly. Of course, you've got Morgan Stanley. I haven't updated Morgan Stanley to see where that is. Peak A, peak B, and this is a leg C, a leg E in the weekly chart. Very nice action. And this is the thing I've been talking about. If we're looking at a major, the potential for an absolute washout to the downside, why are some of these stocks, why is PAVE, infrastructure stock, trading at 28.15 on the close yesterday in leg C, so close to the all-time high? This is global U.S. infrastructure development ETF because there's a rotation going on. 29.45 was the high back in January of 2022. Here it is a year later, and it's trading a point, within 2 points lower. Isn't that amazing? So I'm saying to you that there's a rotation going on. If you're able to pick the sectors that are working, it looks very nice. Every kind of pullback holds, and then it makes slightly higher highs or even sharply higher highs. But if you're in the wrong sectors, let's talk about the wrong sectors. Let's see where PANW, I was asked about that yesterday. I didn't have a chance to look at it because it came just a little late. Finally, coming off the low. So this is Palo Alto Networks cybersecurity, one of the really fine stocks, they say. I don't know much about it, but this is what I'm told. This is one of the great stocks in that sector. It certainly held quite well when you think of the others. This made a high just about around 218 earlier last year, and it plummeted down to the most recent low of about 132. Here it is at 142. In fact, pre-market is up 95 cents at 142.95. But wow, it's only now coming off the low. And this is what I'm talking about. This is a rotation. There's a chance now that we see some of these decimated. What was the other one? Was that CrowdStrike? Yeah, look at CrowdStrike, 298 down to 892 the other day. I mean, that is 200 points off its high. So you can see when I say rotation, it means that right now we could start to see some of the Dow stocks take a little bit of a breather. The Dow's been the leader. I got a feeling the Dow's just going to stall a little bit longer. I didn't know about Goldman Sachs and Travelers yesterday, that they would be the culprits to drag it down. But I'm just saying, I think the S&P is also going to stall a little bit. And within that context, what have we got here? We've got a situation that says, as the stalls, maybe we're going to see some other areas start to move. Look at crude oil. Crude oil, this is the daily chart. It's just made a leg deep. Huge pullback from the 81s down to the 73s, and now 72s actually, and now it's back at 81 in a V-shaped formation. And that's kind of what we're seeing. And the 200-period moving average of 83.08, that's about it coming to effect and stall the rally in crude oil, I think, for at least a little moment longer. In fact, if you look at the weekly chart, it's been in a digestive phase towards the lower end of the range. I'll be back. Basil Chapman.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
We're back, 8:29, another few seconds, and we're going to get the PPI report, and we'll see what happens. Look at this, we're watching that. We had the dreaded H pattern, meaning lowercase h, breaks the left side low, and within 3 bars, it wasn't able to get to a new high below that bounce that was made there, and now it's taking off. Whoa, look at that. Up 18, up 17, up 16, 18, 19, come around the bend at 16, 21, 20, 14, 13, 16, pulls back. All right, we're looking at this very closely, and we're going to see whatever the PPI number was. The initial reaction has been very positive. It had a big spike. I'm calling this a leg F in the 10-minute chart, but this is only a leg A. Now, we often see after the 8:30 report what I call the Eiffel Tower, where the price goes whoosh to the upside, and then over a period, almost the same number of bars, sometimes even less, it starts to pull back and takes out the left side low. Sometimes it'll pull back and not take out the left side low and start to build some kind of energy on the right side and then start a new move up. And that starts a leg A that looked like it was a failure and then you get your B and C. Or you can get that inside here. Look at this. There's an assessment of what the PPI means. And as the PPI is being assessed, you can see more and more enthusiasm for the buying. The Dow futures up 96. Of course, I'm doing this show. This is now 8:31 a.m. in the morning. We've had a minute and a half of activity. We'll see what happens in the next couple of minutes. But don't forget that the first reaction sometimes isn't the reaction that holds. And you need to see some assessment and then serious renewed buying, or in this case, it'll be dropping. My initial inclination over the last on Friday was, as the market was pulling back and then started to rally, that something kept saying to me, I'm looking at weakness. And then I looked at the charts and I said, don't presuppose something, because what you are thinking and what the market is thinking might be two separate things. And as a result, we've held back a little bit. Our buying, we're trying to buy dips for certain things. We've got certain positions that I'm not sure yet whether they're going to be core positions, but they're really holding nice enough for me to say that this is good action. And I'm trying to not chase anything, but wait for prices to come back. And in certain areas, we'll have to see how in the next, what's today? Today's Wednesday. By Friday's close, what held through the week that were doing all the sectors or stocks that were doing well last week, holding all the way through this week. If they hold all the way through this week, that's a really big thing for January going into February. If they fail, it says, be a little careful. And yeah, you're looking at this. I wanted to do this live to show you that initial reactions sometimes need to be assessed by the market. The pattern that we're talking about is this single leg A to the upside after an economic news event, and it either holds very well and then starts to take out the high that was made. In this particular instance, I think it's at 4,032.75. If that gets taken out in the next 7 minutes or so, that is very impressive action. If instead it starts to pull back, you've got a potential Eiffel Tower that looks like an uppercase A. It goes straight up and straight down. And if that's the case, it means the stalling action. This is my concern over the last few days, the reasons why I didn't want to chase anything. My concern is that there's been a very big move since the October low. And let's come back to that. And as a result, I think it's a digestive phase that I'm expecting in this. Oh, I shouldn't have gone out of that. Look at that. This is the Eiffel Tower. Straight up, straight down, and whoosh, we come back down again. We've taken out the low, and that's the reason why I gave you a live performance here of the reason why buying and a gap up initially says, that's fine, you can do that. You better put your stop, and I have a way to do this, and that is you get in as it's starting to move, and you just take profits, or if you're quick enough, you can raise your stop, but you've got to get out at your entry price. You cannot hold, even if it goes below it and then comes back and has a fantastic rally. Treat that as something separate. This is the Eiffel Tower. In fact, let me type it in. It's even a little bit more than the Eiffel Tower because it went right below the ground. Eiffel Tower, A formation, capital A. And I always put it in red because that's what you look for. Now, what about shorting? As it was stalling right there, it is so tough to do. Look, those are 10, even maybe 15-point moves you could sometimes see. Well, I don't know what you want to have as a stop, but you could do that 3 times, and by the time you get stopped out all 3 times, you could have lost a bundle. Just step aside if you're not prepared to, if you're not quick enough to play, not pickleball, but Wimbledon or Australian Open tennis. Don't be here. Just step aside and say, all right, you do what you want to do. I'll come back in when the dust settles. So now what we're looking at is, this is exactly what I was fearing. I'm a little behind. Let's see what happened to gold. Gold had a big spike, went to that missing. Remember I said C1, C2. Very often you can get a leg D and then it pulls back. Lo and behold, you got that missing leg D. I can put a down arrow even if it goes higher because of the steepness of the pullback. And look at this, alternate count F/C, goes to, that was F/C goes to a D right here. So that should have been an alternate count. There's your peak A, peak B, peak C, and this is a D. All right? So you got all these Ds, got to be careful. And that's gold. Oh, maybe the dollar is starting to rally. I'm a little behind. Let's see if that has any effect at all on the dollar. Now, I can't tell. Maybe someone in the den is able to tell me whether the dollar's actually down 31 ticks at 102.06. All right, let's get back to our story. It's enough already. I want to get back to the questions I had. And the questions are ESH23. Let me just get that back in place. There it is. Okay, so within that context, I don't see a big, sharp. Look, even yesterday with that Goldman Sachs and Travelers smashed to the downside, there were enough stocks to kind of hold the Dow up. I don't see that right now. I just see mini consolidations. That's the reason why we're still long, in fact, aggressively long in the Dow. We've got stops in place, but I don't see that as some big turnaround to the downside right here. I think it's more a consolidation. And as long as we're looking at a rotation, then we could see a rotation into some of those very, very badly lagging stocks that were in the NASDAQ. The other thing I want to look at is the IWM. We haven't got into it yet. I'm thinking that this could be a place to go to on the next big pullback. IWM is 186.98. This is the Russell 2000 ETF iShares, and it stalled at a doji candle leg C yesterday. Pre-market is up 16 cents. But I wouldn't be surprised if it pulls back. 184.70 is the 200-period moving average, and then it makes a D, and then it goes back to retest the inside track zone to see if that's going to be key supported. 181 in the weekly chart. That's the 14-period. No, that's the 9-period exponential moving average, which finally crossed positive, and that's a big thing. It has not been positive since. There was just a brief moment when it made that high at the resistance level back in August. So this is going to be very important. That's what I think I'm seeing is kind of a digestive phase for some of the big winners. I'm a little upset because I wanted to buy GE the day before the split, and I didn't. I thought to subscribers, look, if we get GE, and I can't remember the price, it was at 80-something, right? If we get GE and we get a portion of the new GEHC, which is the GE Healthcare Inc., that had already IPO'd around about the 18th of December. I thought if we, of December, if we get that should be a very good company. They're quite heavily into healthcare. But it was just too much of a gamble, and yet both of them rallied very nicely. I'll be back in a moment. Basil Chapman, early edition. The Dow futures are now, if I can find it, down 5, and S&P's down.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, we're back. This is the early edition. Market hasn't opened yet. We've had a lot of excitement. So Cleveland Cliffs was a question I had a few days ago. I did all the many other steals. I'm not sure if I actually did Cleveland Cliffs on Friday. It's CLF, it's a symbol, flat roll steel, iron ore pellets, took over a company we once owned, AK Steel. At 21.20, it's up 28 cents pre-market. Doji candle XC, it should go to D, but if you're looking at the stochastic, 97.79, that's 2.21 off 100%, which it never reaches, although we saw the other days. I should have written it down. There was a stock that was at 99.97 or something. I don't think I've ever seen that. I should have written it. I probably did write it down, but I won't be able to find it. So this is a little bit overbought in the daily, but it should still go to a pullback and then go to a leg D. That's the first thing. The other is, people talk about gaps. I treat gaps like it was a doji candle or a moving average or a significant, an observation, something very visual, and that's all. In other words, the gap that's between 16 and 15, that was back in mid-December, around about the 21st, 22nd, that doesn't have to be filled in. One day it'll be filled in. But I just ignore that. The further away you go, it's like the 200-period moving average. Do I care about that at 17.70 when it's at 20.92? I will care about that if it goes back to 18.44. But right now, it's far away. So treat gaps as important, but only as you get closer, whether it's on the upside. Now, the other question is gaps on the downside. Very sharp. Oh, what were we looking at the other day? Oh, it was asked. Jane had asked me about it. Oh, and I looked at. Oh, that was GII. GIII. I think it was 3 I's. Yes, this is GI. This is G. What is it called? It's called G3. Oh, yeah, G must be 3 ones. Apparel Group Limited. Limited means it's probably an English company. Anyway, that doesn't have to. So look at that huge gap. Huge gaps. That's one thing. But if it's a gap like, was it Microsoft? Was it Microsoft? No, I didn't hit the right button, did I? No, I didn't hit the right button. So MSFT. Yes. So yeah, Microsoft had a huge gap down. Well, for it, it's not such a big gap, but it's visually it looks pretty big. So there were 2 gaps. There was a gap from the January the 4th, and the low was 225.96, and it just made a peak E high in the Chapman wave at 263.92. So there's a little bit of a gap. The low on the 14th was 254, 254.81. The next day, the high was 254.20. So about a 60-cent gap. But wait a minute. It comes down. It hasn't filled the gap ever. And then it comes down, makes another gap. And that gap from the low bar of the 3rd of January, that was in December. Yeah, so the 3rd of January, that's very different, because there the gap was 237.40 was the low, and the next day the high was 232.87. Well, it filled the gap. So I find that when gaps, this is a small one. There are a couple I'd written down somewhere in my notebook. I've got them written down. But when the gap is very big, if the price gets filled in, and then there's another consolidation, and it goes below the gap, and then there's an even bigger move to the upside, that second tranche of buying says whatever happened before is done. Because once you're moving, especially if you go above, say, a peak, in this case in Microsoft, if it ever starts on a weekly basis to close 2 out of 3 weeks above the 245.75 high of the 3rd of January, it says the next effort should be to try to fill that little tiny gap. So the better you make price bars on the upside, completely filling, especially if it's a huge gap on the left side, at some point it says from that V shape, from the bottom, there's everything that happened on the downside has been negated by fixing the problem, and now you're looking at it positively. So I look at gaps. I have different theories about different types of gaps, etc. When there's an immediate gap, we saw that in Nike. Remember Nike had that huge gap, earnings gap? Look at this. And my whole thing was, if Nike doesn't even get into the gap and start to hold there, but in fact starts to take out the high in a very concerted way, you can have a brand new buy signal to buy mode that should take you to a leg D. And that's really positive. And lo and behold, look, it had that rectangle formation for about 7 or 8 sessions. Then it broke to the upside. The MACD was improving. You got a fantastic turnaround in the 9 over the 14 period moving average. It was just one bar that said S for sell, and then it went back to L for long, or short and long. And look at this. You've got a beautiful V-shaped recovery in the on-balance volume, the stochastic, the MACD. So this is very powerful. This is good action. And that says the gap up has now been filled to the upside. And what I wanted to point out was the big distance on a gap up or a gap down. I know Dave White talks about a 3-bar rule. I have a 3-session rule, but it actually it's more like 3 to 5. The reason being, if there's a close after a gap up, if there is a price movement and it closes below the gap session low, that could be a 1-minute chart, doesn't matter, and then it starts to break, and within 3 sessions it's going down to fill the gap, that means you've now got tremendous resistance on the gap bar high. In this case for Nike, it was at 119.18. But if you go sideways and you're building strength, look at the way you're building strength in all the technicals. That says you can forget about the gap for the moment. Yes, it becomes the low where you're starting your wave count, which is F/A, and there was a gray A there, and then they combine to make a B, G/B. There's no H, so that has to be a C. So that says maybe today, or maybe in the next couple of days, 129.24 is hit to start leg D. And then we've got to be a little bit careful. And then there are so many stocks that are in leg Ds and maybe even E's at this particular point. That's the reason why I'm saying there could be some kind of a digestive phase. That's all I'm saying. Now, Tesla, question about Tesla I had yesterday was, do you see all the what was it? I got to paraphrase it because I can't find it in front of me. Do you see all the negativity on Tesla, the way you talk about oversold levels, and just the news being so bearish? Is that a bullish sign? And the answer is absolutely yes. I see Tesla, it's up 5 pre-market at 136. We did not go long. I had actually considered it because the gaps all over the show. But look at the recent gaps, and look at that gap from their low was made at 101.81 about 7 sessions ago. And then that was on the 4th, on the 6th, on the 7th, it gaps up. On the 8th, it just full. On the 10th, it just fills a little bit. That was on the Tuesday, I guess. It fills in a little bit, makes a higher high. And this is now sort of very quick leg C. So I could see, you see this trend line coming down right here? I can see Tesla stalling at about 139 to 141 or 142, and then take a little bit of a breather. Does it have to retest the 101.81 low? Yes, it should at some point, but it doesn't have to do that now. It's already done the monthly chart, a 1-to-1 to the downside. I'll be back in a moment for the final segment.
If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, final segment. This is the early edition. This will be replayed at 10. So let me tell you what I'm looking at for today. I said to subscribers, if the Dow is up after 130, up about 80 points or more, then we're going to have a nice close. But I'm a little concerned that there's maybe some selling. What was that budget thing that Yellen was talking about? Is that Thursday? Budget? It has to be passed. Anyway, whatever it is, there's room for surprises. That's not the point. The point is, you see this E-mini chart. This is going to tell you the whole thing. It might be a 1-minute chart, but what a bunch of evidence it gives you for and clues to look for. You see the rectangle formation, and that's that bar from 8:34 this morning. The high was 4,028. If at any point intraday 4,028 is taken out, there's a really good chance that you've got almost an inverted Roman candle here on that 1 minute and the 10-minute chart, and it says if it can hold 4,028 for more than about 25 to 30 minutes, then there's a chance that you could retest today's high, and that's the high in the S&P of 4,032.25. But if it fails to do that, look, the 1 minute chart has already made a leg D. and that says be a little careful and be very selective. That's all I'm saying. Because there are places that are wanting to work. There are places that are working very nicely. And because crude oil is up, that means that whole sector, the crude oil sector, look, crude oil is up $1.27. And that means that some of the XLE could participate. There's a leg E to the upside. It's still not as strong as it should be, but it's acting quite nicely. That's the S&P Select. So go through this and just be very selective in your choosing of what you want to be in. That's number one. Yes, a question came in, do I still like the steel? Yes, I do like the steel sector, individual stocks that is, but the actual sector is doing really nicely. Imagine trading at 64 when the all-time high was in the 70 area, 70.43. This is a good sign, at least for the general economy. So it's very selective. So I don't know if I'd be chasing. I want to see the Qs. I want to see the NASDAQ and the semiconductors actually continue to hold very well here. And if they start to pull back, then we're getting a digestive phase. So I'm a little cautious, funnily enough, right here on specific areas, and other areas seem to be holding very nicely. Hey, have a wonderful rest of the day. Great programming coming up. Tommy Jr. starts us off if you come up to the 9 o'clock time. If it's my regular show, then of course at 11 o'clock, you've got Steve Rhodes.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.